Thank you. Our company, PeopleCapital, is a vertical direct lending platform focused on the student loan market. We are actually 80% through building our peer-to-peer platform, but instead of going through that here today and seeing another peer-to-peer presentation, we're just going to focus on one of the aspects of that business, and that is the patented human capital score. We have raised so far $2 million to date, $1.5 million in February. We're looking for an additional $1.5 million. That'll get us through this year, and we have $500,000 in commitments so far. We're going to begin to enter information into this demo, and let's talk a little bit about the market and the problem. First, the damage of the education financing gap. Every year, there's $100 billion or more consistently that has to be filled after all government financing, grants, loans, etc. And that gap is generally very inefficient. So how is it filled? It's filled with credit cards by both parents, students, private student loans that have to be co-signed, or more inefficient ways, such as 30% interest credit cards, dropping out of school, getting 3 part-time jobs. There's a lot of expense, worry, and pain in filling that gap, and the choices are inefficient. We're focusing on a demographic that doesn't have a traditional credit score, a FICO score. They don't have credit history. So how do we analyze that risk? And if we could fill that gap at much lower interest rates with less pain. And beyond that, we could actually expand the marketplace significantly by expanding access to credit. Beyond that, the federal student loan guarantees student loans, and that has permeated the industry. And as a result, the student loan industry doesn't really focus on credit risk. It's not their expertise. So with that in mind, the chaos in the marketplace, the lack of trust in the rating agencies by traditional ABS investors, there really is a window of opportunity to do something new through both the way lending is done, but also in how we measure risk. So with that in mind, how did we solve this problem? We went and started by looking in the industry and then going to the insurance department at the Wharton School of the University of Pennsylvania and spent 3 years developing the human capital score prototype and have now developed our first commercial version and have launched our essentially version 1 or beta. What that does is it corrects the problems of the FICO score. The FICO score measures credit history. It might oftentimes, someone who has a high FICO score may be in a discipline where they have low future earnings potential. So this provides a way of analyzing, of not only measuring and getting better prime, but also expanding the marketplace and reducing risk for investors. So we spent years collecting data, cleaning it based upon geography, major, a variety of human capital variables, in addition to where they're going to school and a lot of personal attributes. We back-tested it over 10 years on all of these factors, and this model is amazingly robust even in a chaotic or bad economy, as opposed to traditional FICO-based default models, which often break during these crazy times. So we are going through, we filled out the information, and this is, again, a very simplified version 1.0, consumer-facing. The real whiz-bang is the analysis and the algorithms that are behind this, but this is essentially what a consumer would see, and we project a variety of income paths and break that into, for this score, a 2- and an 8-year score. because there is a big difference between where a person is in their life 2 years after graduation and 8 years after graduation. A doctor, for example, is not going to be in a good situation to pay off loans 2 years after they graduate, but 10 years down the road, when they're making a lot more money, they're in a much better situation. So those types of information are boiled into the 2-year and the 8-year human capital score. We do thousands of projections and simulations that find both the high range and the low range so that lenders and borrowers can use this information to help get better loans and make those more efficient. As far as how people use this, really most of it happens with institutions connecting through our API or XML, and most of this is in the form of data. There are no screens because we're dealing with institutions and they can run hundreds or thousands of scores. But individual lenders, maybe they're a peer-to-peer lender, can come to our site, run the score, and get a score for their prospective lenders. But most importantly, this human capital score is something that we feature on our proprietary peer-to-peer direct lending platform. And there really is truly a synergy by bringing together the human capital score with a peer-to-peer platform, because the human capital score measures the ability to pay, not the willingness to pay. And as we connect that data with a traditional credit metrics, we're able to make the connections much, much stronger and provide an environment in which people can get loans at a much lower rate, at much better cost for both lenders and borrowers alike.